You're with us here on a fresh new edition of Taking Stock. We take stock of the week which has gone by, and what a week it has been. A lot of up and down. We also look ahead, more importantly. That's the purpose of this show. We'll tell you what is important, what to keep track of, and what to ignore. I am Prashant Nair. With me, as always, my colleague Surabhi Upadhyay. Hi, Surabhi.
Hi, Prashant. Well, interesting week for the market. I think all said and done, we have put on 1% more on the Nifty. Mid-caps have done better. The mid-cap index is actually up about 2% as well. Just very quick rewind of what we've seen in the last 5 trading sessions before we move forward. So as I mentioned, that incrementally speaking, this market did hit fresh highs. In fact, we went above 11,700, scaled past 11,750. That was the momentum in the first half of the week. And then there was a bit of a tapering down. All things equal, the market has managed to continue its march past. Some of the niggling areas of worry, for instance, that have emerged are on the macro side. Once again, crude is a talking point, and the rupee is definitely a talking point, was the biggest talking point of the week as it tested levels of almost 71. That played out in stock prices. So what you saw, for instance, on IT stocks or pharma stocks, these were the best performing sectors of the week. Now, the bears will want to talk about the decline on Reliance Industries, which is why I'm going to pick up that stock. Reliance fell almost 3% for the week, and the selling was quite persistent and consistent on Thursday and Friday. The stock is down 6.5% to about 7% from its 52-week highs. Whether it's just routine profit taking after such a huge rally, or is there something more to it, time will tell. But that was one of the talking points from the bears' perspective. Speaking of big events that played out this week, banks have been the watch point. Whether the corporate bank rally is intact or not, that's a big question. The other major facet was the fact that there was no relief coming from the Allahabad High Court for the stressed power assets. So a lot more cases will be clogging up the NCLT. The question is recovery, haircuts. These were the main discussion points when we were looking at banking stocks this week. Speaking of banking, I'll round up with the decline that we've seen on Yes Bank. That stock fell almost 8.5% because the RBI did come out with a view, but a very incomplete view. What we know is that Mr. Rana Kapoor is going to continue until further notice, and that kept people on the edge. So those are some of the highlights of the week gone by. But global headlines, of course, also dominating Mindspace, Prakash.
Oh, absolutely, Surabhi. So, I mean, you look at what the S&P, I mean, I've been highlighting every week what the US market has been looking like, and that is actually absolutely very strong, super strong, and this week was no different. I mean, you look at the S&P 500, the NASDAQ, or the Russell 2000, all look extremely constructive, and the S&P it looks headed to 3,000. I mean, it's not that far away, it's 100 points. The NASDAQ, on charts, people are talking about 10,000. I mean, that is some time away. And the Russell 2000 is making newer highs as well. The Dow Jones Transportation Index, which has been a kind of a laggard, that also broke out earlier this week. So, if the US market, which is the big market, which markets around the world sort of, in a way, track for indication is any indicator, it's strong. Now, the problem is that it's just the US which is strong. It seems the US is strengthening, and even as the US is strengthening, other markets are showing increasing divergence. I mean, the risk-on is not visible in Europe, in emerging markets, or in other parts of the world. India actually is an exception. I'll just come to that. So, India is not trading like other emerging markets. I mean, the correlation, it now seems to be very tightly correlated to what is happening to the US. Oil prices, it seemed like oil was set for a decline, and, for example, WTI sold off leading up to the 15th of August or so, and then from mid-August it has started a sort of up move once again. You alluded to that as well. So it could be a variety of reasons, but whatever the case, it's not good news. I mean, it's the single biggest macro variable. And the second is the rupee. I mean, the rupee, for example, against the dollar is down about 3.5% in the month of August. Other currencies have had it far worse. There are very few currencies against the dollar which actually are higher. Swiss franc is one of them. The Korean won, the Japanese yen. But those are typical safe haven currencies. But otherwise, forex markets have had it very rough. India is not amongst the top losers, but is one of the losers, as I said, 3.5 lower. So, I mean, that's the dichotomy. The US market, the stock market is going super strong, whereas the macros here for India have actually worsened. Oil is up, the rupee is down. So that's where we are at. I'm going to highlight three other points, which again is no sort of revelation in that sense, but is important to track nevertheless. One is that the MSCI India index has outperformed the MSCI Emerging Market Index by about 7.5% year to date. YTD, that is one. So that is India outperforming MSCI EM. Then you look at MSCI India current valuations compared to its historical valuation. Right now we are at 18.8 times 1 year forward, as compared to the average, which is the last 10 years, which is about 15.6%. So, I mean, valuation-wise, it's far higher. And the third is India's P premium to emerging markets, which is actually at a post-global financial crisis highs. I mean, we've not seen this premium being this high, the relative premium being this high compared to EMs after 2008, the financial crisis. So, you know, it's these things kind of do suggest that at some point we will take a pause, and maybe that, but timing is the issue in these things. So the big positive, the US markets seem super strong, and you know, I think bulls will point to that and say, well, what's working, why stop what's working, but we'll find out soon enough. Surabhi.
Okay, all right, that's the setup and what we've seen this week. Joining in to take this conversation forward, we have with us Andrew Holland of Avendus Capital. Andrew, good to have you on the show. Thank you for joining in. Your thoughts? More legs to this rally?
I was trying to think how to be more bearish than Prashant, actually, but he's done a pretty good job there.
Andrew, I wasn't being bearish. Come on. I just stated.
No, but all your points were bearish.
I ended with the S&P. I was careful about that. Yeah.
Yeah. Okay. So let's start with the S&P. So it's a very good thing. Is that you know what worries me about that, and you know, yes, it can continue to be strong. Is that again, I go back to, you know, you like markets when they're strong and there's a lot of, you know, it's a broad rally. So that, you know, the stronger the market, the broader rally should be. But now we have a, you know, what I would call a weak market, because it's a very narrow market. So, you know, it goes back to the 4 or 5 stocks which we talked about before. So if those become unloved at some time, then, you know, what's to save the market is my big question. And of course, ETFs will pile onto that too. So I just feel that, you know, ourselves, along with the US and even Norway, I think are the best performing markets in the world so far this year. I don't know why Norway is, but anyway, we know why the US is. But it's interesting that, you know, we talk about the S&P and we talk about the NASDAQ, but, you know, the Dow hasn't actually hit its all-time high, you know, since, you know, January of this year. So I do wonder about that. And of course, you mentioned transportation, but, you know, overall for the year, they're down. Now, you know, it doesn't bode well when you see the balance of the market rise in the US at the moment is consumer staples, pharma, and I think one other, the safety kind of IT. Those are safety stocks. So I just wonder if at the top of, you know, when you're at the top of everything in terms of a cycle, you get that one last leg up in global markets, well, certain markets. And as regards your thing about, you know, India and EM, and, you know, it kind of makes you feel that, you know, I don't know if you remember walking into January 2008, there was lots of problems around the world, and of course India was standing out against it all. I hope we're not facing the same situation, but it feels very much like that.
Andrew, yeah, but to take that, but is it really sounding similar? Because, I mean, walking into Jan 2008, you already had subprime, right? There was this one big crisis, the housing crisis. We don't have that at this point, at least not subprime, maybe something else. But growth is strong. You can't argue with that. Not just US growth, but global growth. So, you know, you need a trigger, right? You need something. Otherwise, you essentially, sure, there will be pauses and pullbacks. We've had few of those, but we've had those, and maybe we get another one. But people will say, so what's the big deal?
Okay. No, so Prashant, let's just take what you just said. Is that actually, you know, I'm talking about the early part of 2008, because then it all started to unfold from, you know, March, April onwards in 2008. Before 2008, in 2007, most global markets were down. India came into 2008 one of the few markets which is rising. And don't forget, even then, GDP growth rates in all countries was very high, including India. So I'm not saying we're getting into anything like that, but I'm just saying it feels, why are we standing out? And I'm not quite sure why, apart from domestic flows, obviously. So, in the US, again, you've got to remember that earnings have been helped by two factors in the past 6 months. One is the tax cuts, and two is earnings per share are being helped by all the buybacks that you're seeing, because companies got this big tax rebate and they're just buying back their own shares. So that propels the earnings there. If you strip out some of that, you'll find that corporate growth is not as great as people think. So these are the kind of things that worry me. They're just bubbling at the edges. House prices in the US, new housing starts, existing home sales are all falling. And this is, again, just in the background. Why should that be when the economy is growing at 4%? So, and interest rates are still very low.
Okay, that's a scary thought again. The moment I hear housing and housing starts in the US, this brings back some really eerie memories. But just want to talk about the big factor here in India, Andrew, now, and this debate around the rupee at 71. A lot of economists will come out and say that it's actually a good thing. It's good for exporters. It's good for domestic manufacturing, makes it more competitive. Some of the brokerage notes that are floating around are suggesting how 50% of the Nifty companies actually benefit. So, I mean, there's an earnings fillip if the rupee continues to weaken. Where do you stand in this debate? And, for instance, IT, pharma, are these some of the kind of plays that you would look at given where the currency is?
So here's first of all, I think fundamentally, I think the rupee is there or thereabouts in terms of where it should be. We were thinking more around the 70 level. But that's with fundamentals. But I think now with what's happening in other emerging markets such as Argentina and Turkey, it's just pushing that a little bit further than it should do, actually. I'm not a big buyer of India. I mean, listen, I don't think anyone's ever gone out and said India is the biggest export story, and that's why you should be buying India. India is a domestic-driven economy, and that's really where you should be looking. You will have times when the currency will be a tailwind for the likes of IT and pharma. And IT we like, pharma I still can't sleep at night with all the different regulations that come out and either hit the share price or move the share price. And again, I still think it's a sector which needs a lot of change in terms of the management thinking going forward, because in terms of the generic side anyway, pricing is not going to come back to you. So you've got to change your business model. And that's very painful. You saw it in telecom, you've seen it in IT, and it's still going on in IT, and pharma is still starting. So it will, I think, how I would put it for pharma is that I probably don't want to own it, but I don't mind renting it if I think the rupee is going to depreciate more. What could make the rupee depreciate more would be if the US and China have a trade war, because I think that would spiral emerging market currencies even further, including India. So that's what you'd have to expect. But fundamentally, without that, then I think the 70 is about the right level.
Mm-hmm. Andrew, so if you were a 25-year-old bold trader, I don't want to say bold and old because they don't go together, but bold and 25-year-old trader, what would you do with with the wisdom that you have now, but bolder? What would you do? Would you sell markets? Would you go short markets? Because your view is bearish that we will see a correction.
Yeah, so the bold part is kind of is interesting because you could have done that say this month and you would have been whipsawed, right? So sometimes you just don't know the timing. You know it's coming, but you just don't know exactly when that's going to be. So if I was that young and bold, I would just sit on the sidelines and just wait till I saw those signals starting to come through, and then do what I needed to do.
I mean, if you were young,
that's very easy to say, but it's actually.
No, go on.
Sorry. I wish.
I am sure Andrew is still very young.
I didn't mean it like that. I just wanted to clarify.
I'm sure at heart you'll find him around different interesting spots around the city, and I'm very sure he'll tell you that, he's as young as ever.
Don't reveal too much.
No, but Andrew...
Yes, well, apart from my nighttime life, yes.
No, but to get back to the more serious import of the question, you do have a long short fund, and if you were looking at shorting this market because you seem to be convinced that at some point it's going to hit, where do you think it'll hit first? Where will it hit hard? And I'm not saying tomorrow morning, but if you're thinking of short ideas in your head, where are these shorts?
So I think the initial hit will be on the banking sector actually, and the PSU banks, because if I just take I'm just talking about global markets falling, and what would you be thinking? You'd be thinking that that the currency is obviously going to work against you. There's going to be companies with debt overseas in dollars which are going to be suffering because of that, and it all comes back to the banking system somewhere, right? So, and then if you've got a fiscal deficit which is increasing, and borrowing costs will likely go higher along with interest rates, and that's going to make again a problem for the banking sector. So everything heads back to PSU banks, to be honest, as a first place to go and short.
It was quite interesting that banking and especially PSU banks this week sort of held on with what was happening with oil and the rupee, etc. Actually on Friday, PSU Bank Index was up almost 1% or so in a market which was going nowhere. So you're saying that's the area which is most vulnerable whenever the correction starts. You still believe that?
Yeah, because there's no fundamental reason to be there. So what we have at the moment, Prashant, which also worries me, apart from the very kind of narrow-based kind of rise in the market, it's very rotational. Yesterday I think PSU stocks were down, right, and now today they're up. So it's very rotational. It's not rational in some respects, because it's one sector after the other, and there's no clear. Whilst you get clear winners, maybe 1 month, the month before they would be different. So that's what's kind of worrying. It's not fundamentally based in some respects.
I think which has not been rotational has been Reliance. Surabhi mentioned that earlier. It's corrected about 100 rupees over the last 3 sessions, Andrew. What's your view there? There's this thesis that funds, both foreign funds and local funds more so, are massively underweight Reliance relative to RIL's weight in the indices. So there is still a fair bit of catch-up there. Your sense?
Yeah, no, that's been the bull point for the last 2 months, since it started its big run. And listen, it's down a little bit, but it's had a great run in the past 2 to 3 months, and that's obviously based on not just the fundamentals of the company, but valuations you could stretch if you want to in terms of Amazon or Netflix type ratings for some of its businesses, which is not so far-fetched if you think about it. Has it run up too much in the short term? Probably, but I don't think you can take away those kind of thinking going forward and separate it from valuations for very much longer. I think that's what the market did, and I think it's probably got it right so far.
All right, Andrew. Good talking to you as always. Thanks very much for joining in, and we leave you now to enjoy all the young pursuits that you intend to look at this weekend. Have a great one, and we'll catch you again soon. Well, on that note, we'll take a very quick break. As we do that, we leave you with a slice of the market opinion that we gathered during the course of the week. Listen to that. We'll be back in just a moment. Ashwini Gujral joining in with the technical setup for the market next week.
There is a good chance of correction. Yes, correction will happen. But, you're seeing every 5-7 days, almost every week, 15 days, a month, you are seeing new high.
The S&P hit all-time highs, and everything else is getting dragged along with it. So the most important factor remains the U.S. Fed and the U.S. stock market, and particularly tech, and the narrowing of the global cycle in terms of leadership. The good thing about India is that it's starting to accelerate in the last year. And so even though there may be some global dampeners in terms of the Fed hiking, the US bull market being very old and extended, the Indian economy is finally starting to pick up and accelerate, and there is some movement on bad loans, and there's some progress there.
We would like to believe that this market is clearly headed a lot more higher, and there is no reason to believe that we might be overbought even at 11,700 levels. We have been working with that target of about 12,000, and we believe that the Nifty should get there possibly in the next few weeks itself. Just for the near term, there is some resistance around the 11,800 area, so you could see some consolidation there, because in the last couple of weeks the rally has been almost vertical. So some consolidation in the 11,550, 11,850 band would not be a bad thing. So that's purely from a short-term perspective. But medium term, I think we are definitely headed towards the level of 12,000, and you could even see the Sensex test a level of 40,000.
The last 1,000 points have really taken most people by surprise. You know, we were coming out of a 6-month, very, very difficult market, and where a lot of the mid-cap, small-cap indexes were down 20–30%. I really think that one must have a belief in the longer-term trend that we are in this market, and one must not really wait for the perfect situation, perfect correction that at which stage I'll deploy. You must get into this market. Yes, it's run up a lot. Yes, it will correct. But the thing is that you have to look beyond these short-term cycles and ultimately be allocated to equities, because I still feel that we are part of a larger bull market, which I think will carry on for the next 2 to 3 years.
Even if BJP or Mr. Modi may win the main elections, you cannot say the same about the state elections. And will our market or the investors be intelligent enough or discriminating enough to say, no, this is center, there is state, you know, there is still, you can say, a viable opposition. In center there is no opposition, and people will vote separately or think differently. So that is one event which we have to cross. But you know, for us, always we have 25–30% short even now. But we have, as I said, changed a little bit of the mix on the long side, and little bit we have changed the shorts.
Well, Ashwini Gujral is now joining in with his view on the charts. How are things looking? Ashwini, as always, let's just begin by wrapping up what you made of the week and you know, the close on Friday. What does it tell us about the coming week?
See, what's happened this week is very interesting. Given we are a CAD country, you know, the market held on despite you know, poor macros. And what's happening here is that the PSU banks on all declines are seeing fairly strong buying. So while, you know, IT, pharma, everybody expected with a rupee decline, what wasn't expected is this performance by Bank Nifty. You know, the simple rule in the market is if something does not go down on bad news, it's strong, and the moment that bad news turns around, which means crude drops at $2 or you know, the rupee starts to recover a bit, you will have the rally of your life in the Bank Nifty. So having said this, you know, September looks like a consolidation month. Till you know, trade the boundaries, basically, you know, 11,550, 600 on the downside and 11,750 on the upside, you should be doing fine. I don't think you will see great trending moves because certain stocks have gone into correction, but overall, you know, if we can hold on to these sort of levels, maybe 27,800 on Bank Nifty on a bad day, you should be okay for September, but it will remain choppy, and basically we will outperform other markets, but unlikely we will have a rally as strong as the last couple of months.
So, Ashwini, you're saying trade the boundaries. Basically, I mean, buy every dip that you're getting, every couple of points?
Yeah, basically any day you gap down, that should be a good day to add to your portfolio. Even for trading, that will be a good day, because now you have several engines which are firing. So even with a 3% decline on Reliance, the market didn't really close on the downside.
Ashwini, for public sector banks, I mean, as you indicated, would you say, well, buy a bunch of them given the performance of the week gone by?
See, the issue is that what we were looking for is whether the bad macros impact them more, or do these resolutions start to play in? What appears to be happening is that the declines which are created by those bad macros are getting bought by people who want to get on board these corporate lenders. So that way, most of these days, these PSU banks are closing towards the upside. So my sense is that should continue on these banks.
Okay, so I'm guessing, the PSU banks would be among some of the trading ideas overall. Picks for the week?
By the close was up about 3.5%. So that's a buy with a stop of 82, target of 91. BOB is a buy with a stop of 146, target of 158. And Canara Bank is a buy with a stop of 278, target of 290.
All right, Ashwini, thanks very much. Appreciate you joining in on technicals. Interesting, Surabhi. You had Andrew saying that the first segment to be hit will be PSU banks, and you heard Ashwini. 3 buys, all banks, PSU banks.
There's trading on a daily basis, and then there is sort of slightly longer term calls. To each his own. Take your pick.